I think all I'd say with regards to bond yields starting to creep up, I think that's a healthy thing in general. I think where it ceases to be healthy is if equity markets never ever priced in 1% on the 10-year. That was never the case. If you think long run risk premiums are about 3% over and above that, if you think therefore, if you like, the cost of capital was 4% 6 months ago, let's say, the markets were not trading at the reciprocal of that, i.e. 25 times earnings. They were definitely pricing in an element, a sort of a margin of safety relative to where bond yields were. We can look back at a lot of historical data and start to see the moments where multiples do derate, and as I say, I think it's probably about another 75 to 100 basis points on your 10-year in the US that would start to be unsettling to multiples. But I think we are in a window whereby bond yields can continue to rise. If it's married up with a growth picture as well, then I think we can look at earnings growth and not huge multiple contraction. And as I say, I think the magic number will be above 3.5% on a 10-year bond yield. Will be awkward for equity markets.
Earnings growth. Delicious notion. It's been a little bit lacking from this system.
Yep.
You've got animal spirits. It suggests that you've got to get earnings growth at some point in 2017 to keep those animal spirits alive, to keep on feeding the system. But will they come through when you've got US dollar rallying from what was a sort of a decent base anyway? Isn't that going to impact a lot of the large cap stocks?
I think, look, again, where you sit, I think, if we sit here in London, broadly speaking, the stronger dollar is good news because of the overseas earnings. We have been in a well-documented, appalling earnings bear market since 2011. We're almost about a third lower than the earnings achieved in the UK market in 2011, but we are crucially off the bottom. We've actually experienced about 20% growth relative to expectations since March. It's been definitely dominated by mining, a little bit by oil, and I think just in general now we're also potentially looking at a financial system, i.e. banks and life insurance, with a slightly improved yield curve, that they may also be able to start making money. And let's not forget, it was that sector that made about a third of profits in the UK market. So we could be in a sort of reasonably pro-cyclical event where bond yields up is actually quite good for our financial system. That's definitely been a good thing historically for economies and jobs.
I get that. So you go hunting in unloved sectors, but what about the whole point about large companies? I mean, I mentioned the US dollar, but there's also the impact for emerging markets. If you get a yield curve that steepens too fast, it's very negative for emerging markets and for sentiment in those countries. These are large, diversified companies that have gone after emerging markets for their growth. Yeah. Surely there must be this story that plays out, even if the US domestic market is strong, emerging markets may not be. So isn't there a wild card for this whole earnings picture when we talk about global US companies?
Yeah, I agree. I think it's a huge balancing act, the globe. And as I say, it seems probably the US is going to adopt reasonably sort of self-interested approach, probably with a stronger dollar and onshoring. And, I think we need to be a little bit cautious about that, clearly. Also, there is a stronger dollar and rates up and the effects that does have to emerging markets. People always cite the stock of debt in emerging markets is an all-time high. But if you were to look at emerging market debt relative to GDP, it's not hugely out of kilter. Therefore, I'm sort of trying to come down on the slightly sort of positive side on the debate, because I think so many people are the other way. But I think, historically it has spelt problems for EM. People clearly cite the level of debt. All I would just encourage people to do is look at the level of debt relative to GDP, and it is not a dramatic outlier relative to history.